Okay. So let's see. We make sure everybody got in. Oh, I got to get my camera. Sorry, guys. Some new stuff coming into the channel today. Going to get a little bit better at making these videos and making them more interesting for you guys, and really finding ways to capture the story more. So sorry, not everything's completely set up. We're like using OBS to restream to all of our market channels, so it's been kind of interesting. And then trying to get all the comments and stuff posted on Twitter and whatnot as far as things go. Okay, so I mean, we have a functional channel here. Let's see if we can't grow it to something, huh? From 10 followers to 1 million. All right. Hi, welcome to the Russell Journal. My name is Russell Liss, and you're watching from 10 to 1 million. That's basically my goal right here, is to go from $10 to $1 million. So in this, really my goal of doing this is to do this through the stock market mostly and through options mostly, see if I can sort of hit these benchmarks as far as things go. Now, there's a few things that I've learned. I've spent almost 2 years trading now, and there's a bunch of stuff that I've learned that I'm going to apply to myself. This is not any sort of wisdom or advice that you have to follow or anything like that, okay? But when I was new to trading, other traders told me really setting amounts of money that you want to earn, right? If you have $1,000, how long will it take me to make $1 million? This is kind of a really bad idea. This is a really big, huge setup for failure right here. What most trading is definitely a game of odds, right? If you take 100 trades, you want to see that 51 of those trades are green and profitable, and that 49 of those trades are maybe red, but they're only red, maybe 59 of them alone or 49 of them, right? So that you're winning more than you're losing. And then what they want to see is that those 49 profit or losses that you're going to suffer are going to be smaller losses than the gains. So if out of 50 trades, I make 51 trades, I make $1,000, but out of the 49, I lose 1,100 of that. This is a negative gain, right? Negative net gain. So we don't want to see that. I don't want to create that sort of situation for myself. And so really want to focus on those winning trades, placing those winning trades and setting. So with that, then like what I can do is set like my win loss, right? So I can set a win rate of around 5%. That means as soon as I'm profitable, as much as 5%, I'm taking that off the table. Okay, no matter what. Whereas my losses might be 2 to 3%, right? Now we're doing options, and so from what I've seen, 5% is not a bad loss set, and 10% seems to be a pretty good win set. So we're going to move that around. So if I'm in a trade, I lose 5%, bail out, right? If I'm in a trade and I make 10%, I stay in, okay? So, or I take the profit at 10%, this is sort of how the professionals at this point that I've watched, they're kind of doing it. They do take on bigger position sizes, and they will do things where with their sizing where, if they buy 10 contracts, they're going to, if they buy 10 contracts, they're going to take some of that off of the table and push it aside. Okay. Now, going kind of into, now let's kind of go into sort of like what I want to talk about in this thing. So if we go and look into the market today, right, you can see this massive move up in the market, and which doesn't, if you've been following this channel and sort of anything that I talk about, we should be heading into a massive bear market at this moment. Everything should be in a slump. It should be panic in the streets. It should be blood everywhere. And for a little while it was. But there's some principles of the market that the market really tries to hide and they try and deny. Okay. And one of the principles of the market is that investors don't move markets. Traders move markets. Okay. Anybody who's invested wants to invest really low. They really care about getting the cheapest price and then trying to get the highest price when they sell it. This is really like where investors go, and they're going to be in there for a very long time. Okay. But all of the buying and selling that you see in any stock on a given day, this is traders. This is the trade that's happening in that day. That's the exchange. And this is where, if you have a really small account, opportunity really sits, because you can repeat a 10%, I'm hoping to repeat a 10% compounding interest almost daily. That's what I'm hoping to. But keep in mind, this is only going to work for really small accounts and really small position sizes. It's not it. I have played with $10,000 a bit, and it doesn't super scale well. So when we get up there, we're going to have to find a new process in that area. But there is a from my experience at this point, your ability to compound 10% repeatedly, on account below $5,000 is pretty regular, your ability to do that. So, and I've built an account back basically doing that one leg at a time. So, and managing small position size, stuff like that. Anyway, it doesn't matter. All right. So really want to think about this from a perspective of traders move markets. Investors don't move markets. And this can all be sort of traced back to like the basics of economics. Okay. The thing is when we talk about economics, we're talking about trade and we're talking about wealth. Okay. And those two things are synonymous. Trade creates wealth. Okay. I have food. You can build houses. Now, you build yourself a house and you are safe. You're not going to freeze to death, anything like that. But you are going to starve to death. I have food and I'm not going to starve to death, but I'm outside and now I'm basically freezing my ass off till I'm dead, right? But if I trade you my food for a house, right? Now you won't starve to death and you have safety from the elements. And now I have a house and I have safety from the elements and I have food. So I have I've reduced the amount of danger that I'm in. So I've doubled my wealth basically by creating a longer amount of time that I can survive. So all of that being said, trade creates wealth. And that's one of the reasons why I fell in love with trading to begin with, is because it was something that you could look at and see where it would create wealth. As long as you sold something for more than you bought it for, you could create wealth. So I really love that concept in the market, and I have sort of abandoned that, and I've abandoned that in my technical analysis, and I've let a lot of these bear theses really roll over the top of me and think, oh, we're going to get this massive move. It's going to be a plunge to the downside and this stuff. And really, I'm completely shocked. I'm completely and utterly shocked now. The traders still behaved like traders, but they're traders. If you go last week back to when the Fed went to speak, right? The rule in trading is buy the rumor, sell the news. Well, if there was a chance Powell was going to say, hey, we're not going to raise interest rates because the market's down so much, traders had to buy that up, just hoping, right? The other thing is, if we look at all of our major indexes, when we get down, when the price gets below the 200 200 simple moving average, traders have to come in because probabilities and statistics say that that market is going to go up now that we've come down below the 200. And not to mention, it's good because remember how we talked about investors wanting to come in early and get cheap prices? If something's under its 200-day moving average, it doesn't get much lower than that consistently. Yeah, you can hope for a black swan crash and you can get penny stocks for pennies, but you don't know that that's going to happen. So buy some here. And if it does crash, buy some more when it gets down there. If you're investing, okay? If you're trading, it's a different story. So, so you had to know the investors were going to start picking up shares. They were going to start consolidating shares. And we had to know that under the 200-day moving average, the traders were going to push the stock price back up. And I frankly, and this is one of the things that I kick myself for, is I knew this. Like this is like basic technical analysis stuff that I knew. But I was so caught up with the Fed raising rates and the bonds going here and this, that, and everything. I really lost sight of just pure technical analysis and basic day trading fundamentals. And so this has really hurt me because, on one side I listen to these investors but I'm a trader. So I have to identify that I am a trader. I must follow the rules of trading. I must follow the technical analysis of trading. Okay. So going forward into February, okay, based on like what we know of traders or what I have learned in the last couple of years of traders, these markets are probably going to go up mostly through February. And they're probably going to go up probably until the next, you'll probably see a little bit of wonkiness around the next FOMC meeting, or if there's an FOMC report from January. Now, it may not cause a bad catalyst. You might see a down day there when we get the FOMC report. But for the most part, like the traders are going to push this market back up as much as they possibly can to try and make as much money as they possibly can in the shortest period of time that they possibly can. There will be some now from what I know, there'll be some glitch areas. Okay. We're below the 200-day moving average. The bears are going to try and push it back down under the moving average. We're going to watch for that volatility. Hopefully we catch some puts on that move down. Hopefully we catch some calls on the right side up and we get things kind of moving in the right direction. And so really, this is kind of the process that my mind is going through. Okay. Now I am going to share with you guys my account balance as of today. Now this isn't 100% my account balance at this point. Because we started out, I woke up this morning at about $9.98 in there. What was it? $9.96 in there. I told my dad about what I was doing and he donated $150 to the channel to try and, bolster our results. I'm not opposed to taking gifts and putting them into the trading account. And what better thing to do with a gift than put that money to work? So I don't feel guilty or bad about that really in any regard. I'm actually pretty happy about it and we'll be excited. Now I did deposit it today. Webull takes about 5 days for that money to settle. So I won't be able to trade options with this money. I could potentially do some swings with some stocks. However, I'm not really, I don't really want to mess up my opportunity to come in next Monday. Now we got about $10, we got $9.96, right? That we can trade some options with. I may try and take that $10 and make a little risk off of there. But we will see. And now the other thing is if you are watching and you want me to show you more live as to what I'm doing with my trades, let me know. I would be happy to do some live streams where I show you how I'm looking at the market and how I'm looking at my technical analysis and I'm placing trades. That being said, I still am looking for a longer term trade to take advantage of this move. and really get the most of the move that I possibly can. So think more like a swing trader in this instance. That's definitely something that I'm going for as far as all of that is concerned. So there you have it. Now we should go into really fast. I do want to go into Market Watch. We want to talk a little bit about our trade plan for tomorrow. We got the Chicago PMI. It came in high, which the market sees as good, but I think it's bad. The PMI. So we get the PMI final for January tomorrow. Expect that to show high inflation. The manufacturing. The other thing is that we get tomorrow, we are going to get the job openings and job quits. Okay. This is going to be really big. Part of the job of the Fed is to find to get full employment. And we're looking to achieve this full employment for America. And so we want to see a lot of jobs being created in January. I'm going to guess that number is going to go down because there's a lot of seasonal work that is ending. So I'm going to expect that to go down. I'm going to expect the job quits to be right about the same as it was in December. I'm not expecting a big fancy number for job quits there. All right. So those are the two things that we're really going to keep an eye on going into the morning. And then we're going to go do one other thing. I want to look at the Dow Futures. Now, I am working on a way to get this stuff more integrated into the video. So that's more than just me sharing the screen. It'll be we'll have a little more clip. Yeah, you can see the Dow Jones is pulled back about 13. Oh, the Dow was pulled back 72 points. The S&P's pulled back 13. Okay, that makes sense. A little bit of risk off. People selling into the peak or into the spike. We'll see if it's got enough to keep going. I know a couple of investors that are close to me that have a lot of money in the market. So the market is flat, but it's flat going down. So we could probably expect a fairly decent pullback tomorrow right into the open. But I do expect the bull trend to continue. And I expect the pullback for three main reasons. One, I expect investors to want to take some money out of the market on the upswing. Number two, I'm expecting at the 200, your S&P 500 sitting at your 200 or a little above your 200, stuff like that. I'm expecting shorts to hammer it right there at the 200. And I'm expecting traders, right? So I'm expecting this pullback for sellers, short sellers, right? And those are the two things like that. I'm expecting a full rebound because I'm expecting the traders to come in and want to push this thing wild and crazy into the front. Now, I'm right now not in a position where I can day trade this pullback into the open, but I will be using it to take on and find my long call position for the end of February. So I'm going to look to be bullish in February, just because the Fed move hasn't actually happened yet. We don't have all of the data. And so now some of that can change based on some of that is pretty fluid based around what those two reports come out. If we come out and created lots of jobs and we had no quits, there was 0 people quit their job, like that's going to look really good for the economy. If the PMI shows that inflation is decreasing significantly, all of a sudden things are going crazy, things are going great, and the Fed will, if that PMI comes to a healthy level, then basically the Fed will be like, oh, well, we don't have to raise rates because inflation's going down. So, but until we get those things, I'm remaining a little bit more bullish than bearish on things. I'm expecting probably in the next 2 months or 3 months to see the bear market actually fully kick in. So partly due to China, but there's plenty of reasons for it to stay bullish, even with higher interest rates. I mean, historically, it always has. And if we have a war with Russia, then it very well might likely stay up there. So anyway, that is it for me tonight. For the Russell Journal, I am Russell List. You've been watching 10 to a Million. So, and I hope to catch you guys back here at the catchphrase. Yeah, that sounds good. I think catchphrase is going to be my new catchphrase. You guys have a good night.